Hello, fellow traders. 'Tis I, the Rumpled One. It is Monday, May 14th, the year 2018. Let's talk trading. Being consistent. You know, if you've been watching my videos day after day, you get to see the same screens. The money and risk management screen. Because it's something you really need to be consistent about. I mean, good trading is just basically doing the same thing over and over and over again and expecting the same result that you win. Now, if you do the same thing over and over again and you're losing and you expect to win, well, that's kind of insanity. So let us focus on what we're doing that produces profits. And one thing that produces profits is fading the gap from the Sunday, Monday open of the market. So right now we only have 3 pairs that haven't filled the gap. And you can see here it looks like the pound franc tried to fill the gap. Oh, let's see. That close, let's see, where was the close? 00077, and it got to 00065, so it missed by 1.2 pips. You know, that's close enough for a hand grenade to have been worth about 10 or 11 pips because it's 13 pips below the open. So I think that's what I was saying yesterday. Look for it to go back to par and then come down. So, you know, I'm not trying to predict the market or anything, but I'm just saying that's something that what I would anticipate happening. It's not a prediction. It's saying, you know, look for this to happen, and if it happens, then take action. And we can see the yen is pushing upwards here. It's in the upper wick zone from last week's candle. So I don't know if we should expect a break this way or that way. It looks like there's a lot of downward pressure here, you see, but the pressure is getting weaker each time because it's making higher closes there, even though we had a higher high, but about similar. So I think they call that a tweezer or something, tweezer top, if I remember correctly. So, and it also looked like this was an inside bar. So maybe this week or next week, look for that one of these levels to be breached. And we look at the daily, and you can see here it broke out of the high, and for about a 7 pip gain there. Maybe you took 5 and put them in your pocket. It didn't breach the previous day's low or previous daily session low. And then once again, you can see that tweezer top high right there. I guess they call that a double top on the daily, right? But we've got a turn trade setting up depending if the day closes green. You might look for it to continue to the upside. And look at this, the pound New Zealand, 206 pips, 193 over the daily open. I hope somebody traded the buy zone on the pound New Zealand. And speaking of the buy zone, right there, you can see the dollar yen. I think we had discussed this a couple times yesterday. When I came in here, pulled in, and then it came right back out. Came back to that pivot, and then just had to go somewhere from the pivot, either up or down. So there was a nice trade there. But we were looking at this pound. There's a buy zone trade from the get. There you go. If you were trading this, these lines would have been the same at the time, so no hindsight, but this is what happened. You know, see, the hindsight trades, I really think hairy hindsight is when you're using those squiggly lines and you see what they were, but you don't know what they're going to be tomorrow, so you just kind of have to guess. But you see the buy zone, you know, if you have it set, it's always going to be 8 or 10 pips from that daily open, and that's it. It's not changing. It's the same every day. And so price has to range every day, and price almost always ranges outside of the buy zone. Let's see, where's the chart with the range? You can see here we've got the buy zone at 20, and we don't have we've got a couple of 26s, so even those ranged outside of the buy zone. Let's see, we got the euro, pound. I usually don't even look at that. And when we look here at the buy zone, as you can see, it ranged out of the buy zone, didn't come out of the sell zone. So if you took the early, you may have taken a loss. But you can see here, there was a few opportunities. So even on something with 26 pip range for the day, you can still make a buy zone trade that is profitable. And where was the other one? The Australian US. And we can look over here. I guess I could switch it here. And you can see here, there's a buy zone trade. There's a buy zone trade. So once again, that's not hairy hindsight. That's what happened. You can trade that in real time using the buy zone. It's just that simple. Rat zone, not much of a rat zone. It really wouldn't even look to trade it. I mean, we've only got 43 pips, 3 pip difference between the zones. Not much going on. Looking here, once again, at the pivot. We know what happened with the pivot. It hit the pivot. We faded it. It took it out. And going on, still possibly trying to seek R2 of the daily. Okay, price action trades. Let's put this back to H1. And I think yesterday we were right here. This was the 3 at the time. See, this is when people think it repaints. No, it's just self-adjusting. It's not repainting because this is doing it in real time. So in real time, this was a 3. Then if you were just watching and this became the new 3, just reverts back to a 1. But in either case, right here, it didn't make a new high. We were looking at the spread dots indicator, and it was telling us that I believe there was a sell happening, or we were waiting for the sell. It triggered, and that sell was worth about 5 to 7 or 8 pips. You know, nothing to write home about, but just a good solid trade. I mean, not every trade's going to be a 100 pipper or 50 pipper. You know, and that's part of being consistent. If you can consistently take 5 pips out of the market, you do that 10 times, you've got 50 pips. And once again, consistency at the line, you know, green at the line long, red at the line short, green at the line long, green at the line long, right here in real time. Had you taken that trade, you'd be about break even or maybe a pip up. But, you know, that's just being consistent. Once again, wick zones, you know, not much room here, only about 9 pips. But once again, price does not like staying in the zone. And when you see it's tight like this, you just go ahead and take your, if you were in this trade and it goes up and it comes back down, then it goes up and it doesn't make a new high and it starts to come back, just either scratch the trade or take your 2 or 3 pips. Be happy. You know, you'll get another opportunity to trade, and it's just that simple. And I believe yesterday we were looking at the holo zone, which I believe was right here at the time. And you see we did get that move to the outside. And here's another one just happened. And it was good for a couple of pips. So maybe you had moved your stop to BE +1, or you just scratched out and said, hey, you know what? That's it. And right here's the midpoint. So a lot of times if it crosses the midpoint and crosses back, just scratch the trade, take your 2 pips, be happy. You'll get another opportunity. Maybe that will score a run. Once again, did not just turn the computer on a little while ago, so we don't have too much time in sales, but you can see here which way price has been moving. So that's pretty much it, fellow traders. Consistency, doing the same thing over and over again, expecting the same result, and hopefully that result is profitable for you. And if not, then think about it, because it's not what you trade, it's how you trade it. TheRumpledOne signing off to drain the banks.